A new report is sparking conversation about wealth inequality in the United States, revealing just how concentrated stock ownership has become. At the same time, many families are struggling with rising costs, and questions are mounting about how government policy and shifting interest rates will shape the economy. To help us break down what this all means, we're joined by Brendan Caldwell, director of Caldwell Securities Limited. Brendan, as always, it's great to have you on with us. Thank you for the time.
Thank you, Theresa. Quite a lead-in we had.
Now, Brendan, we read this report that says the top 10% of Americans own 93% of the stocks trading on the stock market. This number is unbelievable. What do you make of that?
Well, it's indicative of what we've seen for quite some years, probably decades, as wealth is becoming more and more concentrated in the hands of fewer and fewer. Partly, you could say, well, the system is rigged. On the other hand, I don't know that everybody knows how or what to do in order to participate in the system as currently implemented. So the U.S. Federal Reserve, for example, which is the entity that controls short-term interest rates or has a big influence over short-term interest rates in the United States, really since going back to the crash of 1987, has adjusted monetary policy, the level of short-term rates and the amount of money available in the system based on the activities in the stock market. So if you have the entity providing the money, pouring money into the market every time it goes down, say 87 during the market crash, 98 during the long-term capital debacle, the financial crisis, of course, it means that the game is, in a sense, rigged or at least geared toward the stock market doing well, because every time it does badly, there's pressure to reduce rates and increase liquidity, which we're seeing right now. The U.S. Federal Reserve is cutting rates, even though the economic case for that is questionable at best in the United States. It serves to improve the value of investable assets, particularly the stock market. So, yeah, people who own stocks tend to get richer.
So, if you purchase stock, will you be one of those rich people?
Well, what is money but choice? And I think a lot of people are feeling pressure because they feel they have no choice. You can do this or can do that based on the amount of money that you have. So if you start buying stocks today, no, you will not be rich. But having a little bit set aside in investments that can grow means that you're at least in a small way on board, even if it's just a small way to start with how the system is working. Now, you don't need to necessarily buy individual stocks. If you're only able to put aside $50 or $100 a month for some small amount, it's better than doing nothing. And mutual funds, for all the flack they've been receiving over the last number of years, are an excellent vehicle because they're actually geared for these monthly contributions, these pre-authorized checking or PAC plans. So one way or the other, directly or indirectly, owning a bit of the economic growth of the country means that when the central banks cut rates and stocks go up, when new technology hits the market and stocks go up, when whatever the next great economic thing happens, it means at least in some way that you are participating. And so many people work so very hard for their money to have that money, even a little bit of it working for them, will give them greater choice in the future. So rich, maybe. Having a little bit more choice than they have now, I think so.
So, what is the message?
That the biggest driver of wealth in Canada and the US is what goes on in the stock market. The biggest, boldest economic ideas in the Western world tend to end up getting listed on the stock market. You can talk about the Magnificent Seven stocks: Netflix, Apple, Tesla, Amazon, Microsoft, these sort of things, which make up some vast percentage of the stock market now. But whatever the next thing is that comes along, the big economic ideas are continuing to grind on, and the richest people in America, which is why I think 93%, some big percentage of that is owned by a very small handful of individuals. But the benefit of America over against other economies is that at least individuals can buy a share of Apple, a share of Amazon. They can participate in the wealth of Jeff Bezos by owning shares along with them, so that if the billionaires benefit, people that even own one share benefit as well. So participating in the system is a little bit like lighting a candle rather than just cursing the darkness.
And what do you make of our generational budget when it comes to taxes and regulation?
Oh, this is the generational budget that the current Liberal government is on the verge of passing, if they haven't already. Well, I think it's generational in this much. Um, I've got a couple years on you, Theresa, and I think your generation is going to be paying off this budget and the budgets that have gone before it for many, many years. I came of age professionally in the 90s when both in the US and Canada, governments paid off their, well, didn't pay off their debts. They started paying down their debts. They balanced the budget. They had no deficits. But in the last 10 years or so in Canada, and that's gone out the window, and we've racked up more debt really since the turn of this decade, since 2020 in this country, than we had since the Confederation, since the beginning of our country in 1867. So it's generational in as much as, to the extent that we continue to accumulate debt, my children's generation and the generations that'll come after will continue to have to pay that off, and it's going to be a struggle.
Well, Brendan, thank you so much for the time. We appreciate it.
Sorry to not land on a more upbeat note, Teresa. Thank you.
Thank you.